In this video, we will look at the most recent existing home sales report from the National Association of Realtors and also look at what 7 top housing experts have to say about the housing market. Spoiler alert, it's not good. Hey, my name is Mac Rogers. I'm a real estate broker here in the San Francisco Bay Area. Welcome back to the channel. Can I please ask for an early Christmas gift from you guys? Please hit the like button and subscribe if you like this video. It's the gift that keeps on giving. If you need help buying or selling real estate, give us a call, a text, or an email. We would love to help you out. The latest report from the National Association of Realtors October home sales was released. And really, to no one's surprise, sales are down. The total existing home sales went down by 5.9% from September to a seasonally adjusted annual rate of 4.43 million in October. In terms of year-over-year numbers, sales dropped a whopping 28.4%. The main culprit for this decline has been mortgage rates. According to Lawrence Yun, NAR's chief economist, more potential home buyers were squeezed out from qualifying for a mortgage in October as mortgage rates climbed higher. The impact is greater in expensive areas of the country and in markets that witnessed significant home price gains in recent years. In terms of inventory, it's still not looking good. It's down fractionally for October. Total housing inventory at the end of October was 1.22 million units compared to 1.23 back in September. The number of unsold inventory is starting to climb. In October of 2021, unsold inventory was around 2.4 months. In September of this year, it was up to 3.1 months. And this past October, it was at 3.3 months. This means that back in October of 2021, it was only taking 2.4 months on average to sell all the properties, and now it's taking over 3 months, which is still not good if you are a buyer. This means that inventory levels are still low. In fact, in October, 24% of homes still got over the asking price. Now, on the other side of the spectrum, homes that have been on the market for over 120 days reduced their prices by an average of 15.8%. Properties typically remained on the market for 21 days in October, up from 19 days in September and 18 days in October of 2021. 64% of homes sold in October 2022 were on the market for less than a month. I've talked about this before. The days on the market is slowly creeping up, but 21 days is still fast when you look at it from a historical perspective. In terms of prices, there's still surprisingly no relief. The median existing home price in October was $379,100. That is up by 6.6% from October of 2021. This is true of all the regions. Believe it or not, this marks 128 consecutive months of year-over-year increases, the longest running streak on record. The breakdown of home buyers, like first-time home buyers versus cash buyers or investors or second home buyers, were still within the range of averages. In terms of distressed sales like foreclosures, short sales, it's still marginal. It actually went down from 2% in September to 1% in October. The one thing I want to note here is that we are starting to have massive layoffs that are being announced, and we have to start watching out for this number, as this could be the start of something increasing in the coming months as more and more homeowners lose their jobs and could end up, being in distress. Interest rates are really depressing when you compare it to last year. Back in October of 2021, the average 30-year fixed rate was under 3%. This October, that was closer to 7%. It doesn't take a genius to see why we have massive slowdown in sales volume. The good news though is that rates have actually come down since peaking in mid-November, which could mean we are close to the bottom in terms of the number of sales transactions. Mortgage rates have come down since peaking in mid-November, so many home sales may be close to reaching the bottom in the current housing cycle. Here are some places that are still experiencing largest year-over-year median list price growth. This is according to Realtor.com's market trends report for October. Milwaukee is up 34.5%. Miami is up 25.1%. Kansas City is up 21.4%. Here are the cities with the highest increase in the share of homes that had price reductions. Phoenix reported the highest increase compared to last year, down 35.9%. Next is Austin, 31.2%, and Las Vegas, 24.4%. Let's look at the regional breakdown before I get into what the experts are saying. Existing home sales in the Northeast down by 6.6% from September and down a big 23% from last year. price is up a good 8% from last year. Existing home sales in the Midwest down 5.3% from September and down 25.5% from last year. The median price in the Midwest was up 5.9% from October of 2021. Existing home sales in the South is down 4.8% month-to-month and down 27.2% year-to-year. Median price is up 8% from last year. Existing home sales in the West down 9.1% month-to-month and down a huge 37.5% from 1 year ago. The median price in the West was up 5.3%. So, in summary, existing home sales down for the 9th month in a row. Month-to-month it's down 5.9% and year-to-year it's down a huge 28.4%. The median existing home sales price continues to increase, setting a record 128 months year-over-year increases, the longest running on record. Unsold inventory is starting to climb but still lower than previous years. With that, let's look at what the experts are saying that we are up against. Let's start with Jeremy Siegel, Wharton Professor of Finance. He says this: I expect housing prices to fall 10 to 15% and the housing prices are accelerating on the downside. He said this during a recent interview with CNBC. He further stated that housing prices by any indicator are going down. In another interview with CNBC, he also said, I think we're going to have the second biggest housing price decline since World War II period over the next 12 months. That's a very, very significant factor for wealth and for equity in the housing market. Next, we have Mark Zandi, Chief Economist at Moody's. He says, buckle in. Assuming rates remain near their current 6.5% and the economy skirts recession, then national home prices will fall almost 10% from peak to throw. Most of those declines will happen sooner rather than later, and house prices will fall 20% if there is a typical recession. He also said in a recent housing report, the housing market is the most interest rate sensitive sector of the economy. It's on the front lines of the fallout from the Fed's effort to bring down inflation. There's going to be a coast-to-coast downturn in the housing market. It's going to be brutal. No part of the market is immune. Next, we have David Rosenberg, veteran economist and Rosenberg Research Chief. We have a massive housing bubble right now. Most of the household balance sheet is residential real estate and it is equities. They want the stock market to go down, meaning the Feds. They want home prices to go down, again, meaning the Feds. Why? Because there's not a snowball's chance in hell they're going to get their 2% holy grail consumer inflation without there being a period now of asset deflation. It's 100% necessary. Next, we have Paul Krugman, Nobel Prize winning economist. He says, the Fed's rate hikes have indeed led to a sharp fall in applications for building permits. However, construction employment hasn't yet begun to decline, presumably because many workers are still busy finishing houses started when rates were lower. And the wider economic effects of the coming housing slump are still many months away. He also says that he expects it will be a while before higher rates really hit home prices and demand. Next is Ian Shepherdson, Chief Economist at Pantheon Macroeconomics. We expect a drop of 15 to 20% over the next year in order to restore the pre-COVID price-to-income ratio. In short, housing is in a free fall. So far, most of the hit is in sales volumes, but prices are now falling too, and they have a long way to go. Ian believes the steep drop in home sales hasn't hit bottom yet, and even buyers who set their sights lower to cheaper houses will still face bigger mortgage payments. Next, we have a real estate developer, Don Peoples, CEO of Peoples Corporation. He says this: I think the housing market is on its way into a recession. We're going to see price declines. Price declines have already begun to take place. I look at this as though we have this freight train out of control, speeding up with low interest rates, and no one looked to start to slowing it down or stepping on the brakes. Now, all of a sudden, it's going to come crashing into the station. Finally, Zhen Chao, another economist. The housing market is going to get worse before it gets better. With inflation still rampant, the Federal Reserve is likely to continue hiking interest rates. That means we may see high mortgage rates, the primary killer of the housing demand, declines until early to mid-2023. These 7 people know what they're talking about, and what is scary is that they are all saying the same thing. One is that there's still a lot of pain to come in 2023. The second, 15 to 20% decline in home prices. The third, the Feds will continue their fight to bring inflation down to 2%, which means rates will remain higher in the foreseeable future. Now, let me put on my realtor hat and give you a sales pitch on why you should not wait for the housing market to crash further before you buy a house. I'll give you 2 reasons why this could be the bestest time to get a house. I know that's not a word, by the way. If you live in an area that is highly competitive, like here in the San Francisco Bay Area, this is your chance. Competition is super low right now. You may still encounter competition, and in fact, in some cases, might still be overbidding, but it's nowhere near what it was like last year or even just the beginning of this year. And also, there are times that even if there's competition, you probably won't, you're not overbidding. Most buyers are not offering over the asking price. Now, if you're one of those people that are concerned about prices going down after you buy, this is the only thing that I can say. Look at what happened to housing in 2008. Prices crashed, right? Guess where they are right now? Prices bounce back up. I personally do not like looking at housing as an asset because I feel this is where most homeowners always get stripped up and get so concerned about the monthly price fluctuations. My point here is this: in the long term, home values goes up. So if your time horizon is 5 years, 7 years or longer, it should be fine. You know what they say, buy low, sell high. Look, no one actually can tell you when market bottom is gonna be or when to time the market. Here's a bonus one for you before I end this video. If you want to buy a brand new house, the builders are not only giving you a ton of free upgrades, but they are also giving away additional incentives. I was just able to get one of my clients into a brand new home with free upgrades and got the builder to pay part of their closing costs and points off their interest rates. These things won't last forever, so act now. Hey, thanks for watching, and if you have any questions or feedback, shoot me a comment below. Have a great day.